The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the June edition of Digging into the BI. This is where the members of the Better Investing community from both Maryland and the DC regional chapter get together and look at the latest issue of the Better Investing magazine. There are the four stocks we will be looking at. We will do them in the order of Adobe, then EPAM, LKQ, and then TROW price. So let's go to the next slide. And this is our standard disclaimer in the Better Investing community, is that we're doing this for educational purposes. You should always, better investors believe that you should conduct your own review and analysis. And any securities we talk about, they may be held in our own personal portfolio. We believe, as does Better Investing, to do your own research. We won't be endorsing, even if we talk about a particular stock, we're not endorsing or promoting its use or its website. And as it says down at the bottom, we are recording this for future use, and we'll talk about that at the end. But any of the things that have a blue underline are hyperlinks that if you take the handouts, you'll be able to get to. So let's go to the next slide. So this is who we are. I know most of you are in the Better Investing community, but since this goes up on YouTube, people may not know who we are. There are some links to who we are as an investment organization and what our investment philosophy is. And a reminder that all of the people that are presenting tonight, we're all volunteers in either Maryland, DC, or Virginia. And therefore, none of us are investment professionals and the like. So go ahead and let's go to the next slide. So Better Investing is a learn by doing operation. There are some of the people that were there at the beginning, George Nicholson and Tom O'Hara, and we just sort of follow in that same approach. Let's go to the next slide. We do have a new channel location on YouTube. Some of you may have registered previously or subscribed to it. But we put it up here, and our goal is to get to 100 subscribers. But what we've done is we've sort of added some better analytics and better ways to search through those things. So go ahead and go to that page and subscribe. You can share it with non-BI members so you can be able to find out what we're doing. And like I said, they're all created into chapters, so you don't have to hunt through the entire each webinar to find the stock you're looking at. If you look inside it, you'll be able to see where you can advance to just look at a particular stock you're looking at. Next slide. So again, most of you are regulars here, but just in case you aren't, if you have trouble navigating GoToWebinar, over on the right-hand side in the black background is sort of the border up over there. You can open and close that where the orange arrow is, but where Cheryl's pointing with the green circles, that's where you can sort of grab and move that to a different part if it's blocking your view of something. And again, you can also type out any questions. We do have people in the back room taking a look for it. You can pull that thing out and type it out privately to us, and we'll be able to find you there. We're not going to take questions, but you can raise your hand. We'll take the questions during question time. Next slide. And if you need any additional help, since all of us can hear each other, the audio portion is working, but sometimes people don't have it set up correctly on their own webinar or on their own GoToWebinar page. So there's a quick video on how to be able to set things out. And like we said, with the handouts, if you look at that green arrow down towards the bottom, that's where you can get all the handouts, the SSG and the slide deck for tonight. You can use those and share them with others as you so choose. But go ahead and take those, and don't forget to download it. Next slide. So again, this is a little bit more for people that are a little bit new to GoToWebinar. You can be able to improve your viewing by clicking on the Zoom button, or if we go through something pretty fast and you want to be able to remind yourself of it, hit the screenshot. You can also make that zoom bigger if the images are too small for you. You can do that. Next slide. And so why are we doing this? Well, we want to be able to promote Better Investing and show some of the resources. There's a free 90-day trial if you're not a member of Better Investing. You may not know some of the terms we use, like the SSG or the Stock Selection Guide, but so we're focusing on beginners. But we do have a lot of veterans that are in the audience tonight. It's a way to be able to promote the 2 Mid-Atlantic chapters, our 3 model clubs. And if you're out there and you're in a club and you need a little bit of help, there's a Visit a Club program that we can help you with. And really, it's to be connected inside the better investing community in Maryland, DC, and Virginia. Next slide. So in just over an hour, we're going to go through 4 stocks that are in the latest issue or in the Better Investing website. Our stock to study and undervalued feature. One we have, I think, came from a ticker heat map, and the other one is from the BI community. Actually, it was from the online screening tools. But that's where we have them, and every month we try a different set. Next slide. If you want to be able to know more about those stocks as they're coming up, you can go. You don't even have to be a BI member, but you can go to Home and About Us at the BI website. And if you want to know where the BI website is, on the top of every page shows you the exact location, betterinvesting.org, up on the top. And you can see these stocks. 2 of the stocks we have presented tonight were announced all the way back on March 24th. That's where Adobe and LKQ came out, and you can already see the stuff for next month. Next slide. And for those people that are in the Better Investing community, you can sit there and find out what's going on in the community by going to My Account, where the red arrow is in the upper right, or the red circle, I should say. Come on over to the left-hand side where you have the email product and subscription information, and you can be able to click on a couple things where the arrow is pointing to for the local chapter news. So if you're in the Maryland chapter, you can get their stuff and the like. And if you, before you finish and hit that save, we want to come to this next slide here. No, we were okay going there. Before we hit that save changes, let's go to this page. And this is great if you're, this is just for members only. It's a weekly newsletter, and they show a lot of stuff in terms of what's coming on nationally, whether it's from Ticker Talk or Stock Up. And I like, I've seen some people talking about how they're having trouble with their portfolio, while talking about the PERT report is a good thing, and that's coming up next week or in 10 days' time. Comes out at the close of business on Thursday. And if you signed up for it and don't get it, check your spam filter. Next slide. We're also up on Facebook, both the DC regional and the Maryland chapter. There are the 2 hyperlinks for them. You don't have to be a member of BI, and you can find out what we're doing locally. So go ahead and share that with, again, people that are looking to join your club. You can show them some of the things that we're doing. Next slide. Okay, so here's Cheryl. Do you want to take this one and tell us what's coming up in the DC regional chapter?
All right. We've got a lot of things coming up here in June, starting with tonight's program. Then on the 14th, we're going to have McNova, which is the Northern Virginia Model Investment Club. That's from 7 to 9 p.m. and it's virtual. If you click on that hyperlink, it'll take you to the link for the meeting. Then on the following day is the MCMC Montgomery County Model Club in Maryland. It's over in Rockville, Maryland, and again, 7 to 9 p.m. virtual link, hit the blue. You've got the annual chapter meeting. This is something we are very proud of. It's going to be virtual meeting on the 18th, which is a Saturday, from 10:30 a.m. to 1 p.m. We're going to have as our guest speaker Mike Kinnett. He has a nationally syndicated Savvy Investor program, as well as author of books. He has his own company, Pro Status, that helps people in the regional area, as well as he has offices in other areas to make the most of their finances and to do tax efficiency. Then on the 21st, we have the Money Matters book discussion. That is up from 7:30 to 9 p.m., again virtually. And then coming up toward the end of the month, the 23rd to the 26th, is our national convention. It's going to take place in Dallas, Texas.
Okay, thanks. Let's go to the next slide. And Jonathan, you want to tell us about what's going on besides Bink you had a good webinar last month.
Yes, yeah. The Maryland chapter directors and volunteers meet twice a month on Thursdays at 7 p.m. Our next meeting is scheduled for June 16th. We have an ongoing stock pickers contest that will actually end August 28th. And then we will announce the winners shortly thereafter. You can go to the Maryland chapter website on the Better Investing website to get more information. Our chapter newsletter, the summer edition, is also available. If you missed it, we have a webinar that was presented last month, May 21st, by one of our directors, Roger Cronchi, which was excellent. He does this frequently. It's a analysis and a review of the Better Investing top 200 companies that are usually presented in the April edition of the Better Investing magazine. So if you missed that presentation, the recording and the handouts are available on our website, so check it out. It's about 1 hour webinar recording, so check it out. Thanks.
Thank you. Okay, let's go to our next slide. And Ed, why don't you tell us about your club?
Hi, I belong to the Maryland Model Investment Club. We have 8 partners right now. We started back in 2015. We meet on the second Saturday of the month. For a few years, we've been doing all of our meetings virtually. You can see the link there. So you're welcome to attend, kind of check it out, again, always looking for new folks to attend. This coming Saturday is our meeting. Our education is going to be a step-by-step approach to doing company research, and we're going to be looking at IBP as a stock study and a potential candidate for perhaps buying or putting on the pounce list. Thank you.
Thank you. Susan, why don't we tell us about your club?
Okay, good evening. My name is Susan, and I belong to a couple of clubs. I belong to the Maryland Model Investment Club, and I also belong to the Happy Destiny Investment Club. The Happy Destiny Investment Club was started in 2001, and as you may be well aware, there's a couple of the members on this webinar that also belongs to that club. We usually meet the third Friday of the month from 7 to 9:30. So, welcome to the webinar.
Very, very good. And yeah, there's a picture of us from our social event that we had just on Saturday. Next slide. Okay, so I'm in, besides that club, I'm also in the Montgomery County Model Investment Club. There's a hyperlink to our stuff on the third Wednesday of the month, and we're going to be doing research in your SSG for our education, and we're going to be looking at InMode as our stock to study. If you need any more information, there's an email address down at the bottom where you can reach out to us. And why don't we go to Bhaskar on slide 20 and tell us all about McNova.
Hello, good evening. I am Bhaskar Armugam. I am the president for the Model Investment Club of Northern Virginia, McNova. We meet on the second Tuesday of every month. This month it will happen next week, June 14th. Usually it's 7 to 9 p.m. We usually meet in the library, Tyson Spinmet Library in Falls Church, but lately we have been like only online. I think this June we will do both in Tyson's and online. This month, the education segment, we have different classes of shares, and we will study Holy and Low-Key HLI ticker as a stock to study. Visitors are welcome. Feel free to use the link and join. Thank you.
Just want to say we're not meeting at the library this month. The next meeting at the library is in August.
Okay.
August, oh, I'm sorry. Okay.
That's okay.
All right, let's go to our next slide. Cheryl, tell us about Visitor Club.
On both our websites, the DC Regional and the Maryland chapter, we have a list of clubs that are looking for members with the information of point of contact for those clubs. If you are interested in joining any of those clubs, you can contact, it's on the websites for both of those chapters, and you can get that information and contact us. Also, we have a program where the directors can come out and visit your club and do a program that would be helpful to the members of your club. This is a free program, and it has a couple of perks to it as well. And we can make visits, annual visits every year to the clubs that are out there. So if you're interested in doing that, they're going to be showing my email at the very end of this program. I'm Cheryl Patterson, and please get in touch with me and we'll be happy to come out and send a director out to you and visit your club.
Okay. Well, and again, since this is digging into the BI, we want to be able to make sure you know how to be able to get the magazine. You can get it in the post office, but you can also get it electronically. On the left-hand side is an app that actually came straight from my phone. You can look at it on your phone or your tablet if you sign up for it. You can also, if you go to the website, you can get the e-magazine over on the right-hand side, and you can see it, and it comes out earlier than it does if you wait for the post office. But anyway, let's go to the next slide. One of the advantages of looking at it electronically is with the featured stocks, you can get where the red arrow is, you can get additional resources where you have the analyst report and stuff like that. And if you don't know how to be able to turn on the mobile device for you, the green arrow right above it will show you the step-by-step on how to be able to complete that. Anyway, let's go to our next slide. And we try to feature a story from the magazine. And this month we were looking at fundamentals of investing. And I thought it was kind of good because, you know, we've been looking about it in MCMC is that, you know, where are we is in terms of the direction of the club, a company that we're studying because things are changing with a down part of the market. These are kind of good times to be able to take a look and see where you are. So take a look at that article. Next slide. The other thing is that we've been putting this up as there's an investor event column on the towards the back of the magazine, and there are two free. Well, one is paid is How to Build Wealth. That's from the Northeast chapter. It costs $10, and some of the others have been going to this online value line. Unfortunately, it conflicts with my club MCMC, but that's being put on by OKI, which is Ohio, Kentucky, and Indiana. In the Oregon chapters, maybe it's actually the Portland chapter, but showing you how to use Value Line through your library. So that's free. Go to the links there and take a look at it. Next slide. All right, we're done doing all the intro stuff. So now let's take a look at the first two stocks that are going to be done in core SSG. And Ed, why don't you take it away and tell us all about Adobe?
Sure. Thanks, Kevin. I'm going to be doing Adobe. Next slide, please. And the main impetus behind this, even though it's part of the BI Top 100, was that it is the stock to study in the June 22 issue of Better Investing. Next. So if you turn to the magazine on page 18, it's a 5-page article. And so when I do one of these analyses, particularly since, you know, Better Investing staff has done, you know, some level of research, I kind of try to leverage it. So I go through the article and I take a look at what kind of major themes kind of pop out at me. Two of the things that the review committee noted was recently Adobe has had a big pullback in price. I think it's dropped like 33% since its high back in November. But they also noticed that the PE is still pretty darn high. It's above 40, even though 40 is kind of a historic low. So there's a little bit of a interesting yin and yang to that. So what else can we extract from this 5-page article? Next. So as I go through the article, what I try to do is actually look for things that are kind of unique to Adobe that may give me a deeper understanding of where this company is going in the future. And sometimes part of that future journey is where it's been. So one of the key things about Adobe is that it was really one of the first companies to basically adopt this movement over towards something, and you guys may have heard of this in other articles, software as a service. And it's basically you have the software that's running on the cloud. So in the past, Adobe might be selling discs and you'd have to go and buy it and all that. Now it's on the cloud. And beyond that, what they also did is they made their product a subscription-based type of offering. So now that offers the opportunity for it to be steady revenue, predictable revenue. Other things that I kind of noted were also that the share count has declined. This generally is pretty good. You'll see positive results in terms of EPS as the number of shares decrease. You get some positive movement in that area. The other thing is it's formed a partnership with FedEx. I think what's important about this partnership is that they are trying to remain agnostic to any large company, and they're trying to basically look for opportunities to kind of hook up and try to be the Amazon killer, at least as small e-commerce retailers are a little nervous about putting all their wares on Amazon. They're working to position themselves for the future, and nothing more says the future than the metaverse. So Adobe is well positioned for many interpretations of what the metaverse is. Of course, no one knows exactly what it is, but one thing's for sure is that the metaverse is going to be fraught with is going to be containing a lot of creativity, a lot of things that kind of we can only imagine now. So that kind of creative bent is really made for Adobe. Let's move on. Next slide. So let's look a little bit real briefly what Adobe does. I want to draw your attention to the first and third items. The first one is really all the suite of products that they have out on the cloud. Again, they serve it up as a subscription. Illustrator, Photoshop. Many of you that are in the creative businesses would recognize these products. Basically, they're for the creative content creators. These are the go-to products, and it also is the bulk of the services, bulk of the revenue that Adobe makes. The third area there on the far right is something that's interesting. They've basically been focusing in on acquiring or building themselves tools that will help small businesses do marketing over the internet. There's a lot of competition in this area, but it's one of the key areas that Adobe is hoping to be to make it a growth engine going forward. Next slide. All right, so as I read up on companies, I try to understand what are some of the big factors. So I did that with the article, but then I take a step back. And so a few key questions come to mind in regards to whether Adobe will be a good investment. What is its trend? What is its future looking like? So I won't go through each of these. You can read them for yourselves, but they do involve major trends that really kind of map back to things that we read about in the paper every day now. The Fed's tightening money. Oh my lordy, there may be a recession, and there's inflation everywhere. So what do those things mean in terms of making a decision whether to buy Adobe and whether it's a good investment? So these are my questions. And throughout the presentation, you'll see some data that will help me answer some of these. However, next slide. One thing I want to really implore to you is that when you do research and you're analyzing these companies, look to see what are the questions that you want to be researching, that you want answered in order to make a good decision in regards to investing in a particular company. Next slide. So what do the analysts think? So here are some highlights from both Morningstar and Value Line. I want to draw your attention to three things on this slide. One is that it has a wide moat. A moat, for me personally, is a really important thing. It illustrates, it basically says that this company has a significant, persistent competitive advantage over its competitors. And that leads to a lot of good things. One of them, in the second item here, towards the middle on the right side, is it helps you to maintain wide margins. You're offering something that's special. No one else offers it, so therefore you can charge a little bit more for it, and that improves your bottom line, your margins, your profits. And at the bottom, the conclusion from Value Line is that, hey, it's pulled back in the last few months. This looks like a really good opportunity over the next 3 to 5 years. So let's dig in a little bit deeper into some of the numbers and analysis. Next slide. So over the next 10 slides, and I'm going to go through these kind of quickly because I only have 13 minutes total. I'm going to highlight just a few things in each of these slides. So on this first one, I want to note the competitors to Adobe. There are no real clear-cut competitors to Adobe. So when you're doing analysis like this, you got to be a little cautious in regards to, well, are you comparing apples to oranges, or, you know, what's going on here? So in this case, Oracle and Microsoft are okay. They're mostly identified as competitors because they offer software as a service as far as the products that they offer. But the products they offer are not what Adobe offers. Oracle offers predominantly workflow, database. Microsoft, you all know what they offer, databases and, operating systems, and Microsoft Project, the whole suite of tools. Next slide. So as far as earnings, I just want you to note, hey, those earnings over the last 6 years, pretty steadily rising. That's a good thing. Next slide. Historical stock price. Here, I want to note that historically, the stock price has appreciated very well and fairly consistently. However, within the last 2 years, right now the price is hovering around pretty close to its all-time low over that time frame. Next slide. So let's look at pre-tax profit on sales. This is one of the indicators as far as how well the company is being managed. If you look at this on first appearance, you'll see these graphs, these curves are kind of all over the place. However, what's important to note is that despite Microsoft being a monster in regards to its pre-tax profits on sales, 36.1% is a very strong number for a software company, for any company, but and it's pretty good for a software company. So that's good. And so that was positive to see. Next slide, please. So total debt. Remember before I asked, one of the questions is, hey, you know, how is Adobe going to fare in in an environment where interest rates are rising? Well, interest rates are rising, when they rise, it's an issue when you have to borrow money. So historically, Adobe has not borrowed a lot of money. That has been fairly low. So I would expect that to continue. And that's despite some acquisitions that they make. So this is a really good point. So this kind of data answers that earlier question regarding, hey, what do higher rates mean to Adobe? The short answer is not much. Next. So forecasted sales. The key thing I want to point out here is there's one set of analysts' consensus estimates. There were other numbers that were actually in that ballpark. I selected a little bit lower number for this one. And next slide. And also for earnings. And the reason is I am trying to factor in some probability that we may be entering a recession. So that's the way I'm accounting for a little bit of a concern that we may be seeing some level of a recession. And even though with their large moat and their very satisfied customer base, where I don't think a lot of people are going to drop their subscriptions, I want to be a little conservative on this in this respect. Next. So forecasting high price. This was actually one of the more interesting things. As you can see, starting in 17, the PE ratio has been lowering, and so you got to ask your question: why is it going down? And it could be that, more recently, I mean, it's all the high tech software companies are being hit. Adobe's taken a recent hit, as I noted before. But this long-term trend, I think, may be a little bit more emblematic of this being a company that isn't going to grow at the huge numbers that it's grown before, but it's still growing pretty darn fast. So I'm factoring that in, and as you can see, I kind of selected a PE, an average high PE of 44, which is still below the calculated 52.6 number that's on that matrix there. Next slide. So forecasted low price. This is one area where I do this in a particular way. It's to you individually to figure this out. I like to use technical analysis to help me identify what is a reasonable low stock price forecast for this portion of the SSG. If we go to the next page, you will see a 5-year chart, I guess it is, of Adobe. And I'm trying to be reasonable in regards to, well, what is a reasonable price for this thing to the low price to establish for the stock. And as you can see, my judgment is it's in about the 295 range based on, prior support and resistance over this length of time. Next slide. So what does this, when you roll all these numbers up, you can see that is a razor close buy recommendation. I want to remind you that before, for some of the estimates, I selected numbers that were fairly conservative. So I think this is a very solid, even though it's right on the cusp there, it's a solid buy recommendation, to be honest with you. Let's go on to the next slide. So in summary, Adobe is a large size, moderate to high growth company. It's very well managed. It appears to be on sale when you look at PEs, but again, based on what I mentioned before, you got to be a little careful in terms of trends of PEs and all that. So I just wanted to throw that little bit of caution out there. So I think it is a buy up to 436.30, and it has roughly a 3.2 to 1 upside ratio, of return of about 15%, and I think it's a candidate for purchase. Thank you.
Thank you, Ed. Okay. Next up is Bhaskar, and you're going to tell us all about EPAM systems. Go ahead.
Good evening, everyone. I'm Bhaskar Arumugam. I'm going to talk about EPAM today. EPAM ticker is EPAM. It is one of the most followed, BA community followed stock for the past few years. I picked this one up in 2020 when it was very high quality growth stock, but it has been always overpriced. So I was just waiting for a moment, and recently the price has come down because of some reason. And I wanted to look into that. That's how this study came into picture. Next slide. So that is based on what I said. This is, like I said, when I studied it the very first time, it obeyed all the BA principles using the SSG. The front page was very pretty attractive with up, straight, and parallel. The recent only change is after this Ukraine war declaration, there was a slump in the price, and I was wondering what is going on, and that is the main reason where it found it attractive. Next slide. So usually I do this to understand whether the stock is worth to study. This is a quick analysis tool given by our BA community member back in the 2000s. I found it very useful. Basically, this analysis, you just pick the value line data for the most recent, and you go over a set of 10 questions to study its sales, earnings, dividend, ROE, and their future EPS. Based on the data, just pure value line data, you score it, and the final score will tell whether it is a medium, low, or superior quality company. Based on the most recent value line, I filled it in, and the total score came to 89, which is a superior quality company, which means it is worth to study further. You can do a full SSG using these data. So EPAM is an American company which is specializing in service development, digital platform engineering. So they are basically like a consulting firm in the IT industry. They have been here since 1993. The close competitors are, if you are a BA community member, Cognizant, CTSH, and Accenture are one of the most common tickers, which are of the same industry. So based on this, it is a very high quality, medium-sized company, IT services based company, and they have been consistently growing in sales, earnings per share, which doubled in less than 5 years, which is very attractive. They don't pay any dividend, and they have a very low debt. The asset to liability ratio is high with a 15% operating margin. We are looking for anything like 20, but 15 is acceptable. Next slide. So EPAM, like I said, it is a group of designers, engineers, architects who are all highly technical and qualified, who use the most modern technologies like the cloud technology, the data intelligence, artificial intelligence, all the modern technologies that you can think of, they use that. And they are also focusing on the digital transformation, which is the most common trend most of the companies and consulting firms are going after. So they spend most of the time in this modern technology to implement solutions for very big organizations like financial institutions or natural gas or healthcare, for anything for that matter. Next slide. This is from the most recent quarter investor relations section. I got all this. So these are all actual data coming from their website. The most recent quarter earnings beat the estimates by 37%, which is the main reason. The price was all very low at that time in the February-March timeframe. It was below 300. When it was the high this year, it went almost like $720, but it went to 280 to sometime one day it even hit 160. So I was wondering what is going on. So after that, because it is mainly because of the Ukraine war, because most of their employees, almost like 56% or something like that, are all in the Ukraine area. And that is the main reason they thought that this is going to slow down, and they worked on it. I think they tried to move all their employees out of that area. After that, it did not impact it did not have any impact to their earnings report. Still, they beat the estimates, which was remarkable, and the price started getting into the 300. So it is still in the 300s. It did not hit as it used to be increased. Most of the revenues are coming from the various industries. As I said, it is financial service, travel, consumer, healthcare, business information, various areas they cover. And by geographical location, they're all over the world. They are covered in approximately 45 plus countries. They are spread across the world. So it is not one area. As you can see, the majority of their revenues coming from Americas and EMEA, etc. They have a total of 61,000 employees. They started with 3 employees in Belarus, but it is based in US, Pennsylvania, Newton. Currently, they have been growing from 3 all the way to 60,000 employees. Next slide. This tells their geographical location of where they are spread, or as you can see, they are all over the world. Next slide. So this tells a history of how they were since 1993. They started with 3 employees, and they have been expanding their footprint in different industry. And in 2012, they went into IPO with 10,000 employees when they were making 434 million revenues. It got expanded, and as of 2021, they are like 58,000 employees with 3 billion revenues. It is a significant growth and consistent growth. Like I said in the front page of the quick analysis, it showed like it doubled in less than 2 years on their sales in the most recent 10 years. Next slide. So these are all the what they do and how they do it. They are in the consulting and solutioning of consulting, finding the problem and coming up with a design engineer. They operate and make it optimize and deliver it to the clients. So they use the new modern technologies and they help customers in the digital transformation. And basically they are like solution providers for the business problems for various clients. Next slide. So they are covering several of their clients. As you can see, they are in Daimler, UBS, Equifax, all are their different Fortune 500 companies they are covering. They are all not hung upon one particular industry. Their portfolio is wide. And they have a true success story on each one of them. Next slide. So for their positioning, how they are spreading their market and what all the areas they are covering their IT services. This gives a breakdown of how they do the build using the consulting, the infrastructure as a service and infrastructure utility services, all these. And then the application management on the right side, they do infrastructure management service under the maintain category. These are all different models of their consulting business and their breakdown by percentage. Next slide.
5 minutes left, Bhaskar.
All right. So basically, this is the same kind of slide which tells what their business is. Next slide. And this is the various market trends and their technologies behind that. As you can see, cloud computing, artificial intelligence, mobile devices, agile, all these are the latest technologies. Adobe is also one of the platform that covers these kind of technologies in the cloud computing. There are several stocks that we have studied in the past, which is covering these areas like ADS, the Alliance Data Systems, and all those things. So basically, this is the area where they are focusing, which is a trending industry. Next slide. So like I said, why is the Ukraine war a concern? According to CFRA and Value Line, they are saying they are thinking that it could have impact because 58% of their employees are in Ukraine. But as of the latest news I'm reading, they are working and supporting this Ukraine war, and they are trying to move all their employees to different places across the world to keep the business running. Next slide. So this is a comparison from the Morningstar. This screenshot is of May 9th, but even today the fair value has increased, and the last closing is almost close to 332. This is an outdated, but the fair value used to be 604. They brought it down to 540 as of today's Morningstar. Still, it is below the fair value. On the value line, you can see that it is below the value line somewhere, and the projections, they have a high price projection somewhere in 775 in the next 2 to 3 years. Low could go up to 520. The current price as of today is 332. Next slide. This is something that I compared with the member sentiments who have done various SFGs. The bold one tells the average of member sentiments, and then the second line shows my estimates. My estimates for sales is 10%, and earnings per share is 10%. Which is like I'm just sticking to the medium-sized companies average. And the below screenshot is for the manifest investing quality and par rating, which is 96 and 20 par when I took the screenshot. Next slide. So going through the SSGs, I did not go through each and every screen, but historical sales, earnings per share, and price, it's all upward trend. I am using go to the next slide, please. I'm using the sales of 10% and earnings per share of 10%. This is showing the historical growth, and the average in the last 5 years is 7.8% of. This is the debt to capital.
Two
So
minutes,
they don't have a
Bhaskar.
lot of debt. All right, go to the next slide, please. This tells the estimate with a growth estimate of 10%. It comes to 6.8 billion, 6.6 billion. Next slide, please. I use the same 10%, and the using the 10%, it comes to 12.58 projection for 5 years. Next slide. Can you go to the next one? I have the final. So I use the forecasted low price of 32. I use the PE of 32.8, which is the average low PE. And next slide. Based on all the judgments, 4 judgments I had, it is the current price of 332 falls in the buy range with a 25, 50, 25 zoning. The upside downside ratio of 3.7 to 1. That is the final. It turns out to be a buy. Next slide. So in summary, this is a high quality growth, medium-sized company. Like I said, it is covering the most modern technologies, and they do IT services and the product management and agile transformation, all this. Most of their employees in Ukraine, and they are trying to address that concern because of the current PE is still less than the 5-year, but it is in the 40s, which is significantly high. But compared to the past trends, historical trends, it is on the lower side. Using my judgments, it is a buy. It is still worth to consider. That's all. Thank you.
Thank you, Bhaskar. Okay, and now we're going to go to the final 2 stocks we're going to be looking at in SSG Plus, and I'm going to go first with LKQ, which was the undervalued feature this month. So let's go to the next slide. And so this is LKQ, and it's not only the undervalued feature, but it's one of the top 200 stocks in the better investing community, chucking in at 120. Let's go to our next slide. So here it is from the undervalued feature. I won't read you everything there, but I always tend to like to look at these articles, particularly for the undervalued feature, because inside there, they usually give you some good information in terms of what's going on in the industry, pretty much like what Ed was talking about with his stock to study in Adobe. So they've been growing a lot by acquisitions, but what they're doing is they're shifting to try to integrate their businesses and to help reduce expenses. So we should start seeing 2As and debt going down. So let's take a look and see if that happens. Let's keep going to the next slide. So here it is. It's in the S&P 500. It's a large size, headquartered in Chicago, although it looks like they're moving stuff to outside Nashville. They have competitors, and like Ed was saying with Adobe, this one, the competitors, Advance Auto and AutoZone and Genuine Parts, generally are dealing with original parts. They do have recycled components, but it's really not the same thing. And I always like to look at when the undervalued feature was selected, it was at 45.40, and now it's already up 11% from on Friday. And so LKQ is like, kind, and quality. Those are insurance terms for acceptable replacement parts. They recycle 800,000 vehicles per year in 25 countries, and they can recycle up to 90% of the vehicle, and they can retrieve over 130 parts per vehicle. So let's go to the next slide. And just remember with an undervalued feature is that we're trying to get 20% return in 18 to 24 months. So that's somewhere between 10 and 14% annually. They can be beaten down, may not necessarily be a long-term buy and hold like a stock to study would be. We're not trying to time the market, but still trying to hold it for about a year. And just sort of realize that these may require a little bit more watching than on a good stock to study. So next slide. And so if we look at the acid test that some people use, just like Bhaskar was using the quick analysis, another way is the acid test, and this one passes all the tests that go on with it. So it's enough for me to say, yes, I want to take a look at it a little bit more. Let's go to the next slide. So I always like to look at the CFRA report if they have one, and that's the ones that have a star rating, because they basically summarize everything that you're going to find in the 10 that they file with the SEC. And so it's really kind of good. They call it a leading global distributor of vehicle products. What it really means is that they're a publicly traded junkyard. This is really a junkyard is all you're getting. It's much more advanced than than the old junkyards that you see, but 36% of their revenue comes out of North America. They got 44 out of Europe, and that's going to be kind of good to take a look at it. They're, they have some really good. They're 327 million in cash in equivalents. Their debt is 2.7 billion, but it's coming down. And they did start instituting dividends, and they have been buying back shares. Those 2 points, the dividend and the share buybacks, are something that's relatively new to the LKQ community. So let's go to the next slide. And so I like to look at the industry survey that goes on with this. This is in the retail non-apparel. Problem is that when they talk about the automotive retail, which is a little hard to see. I thought I had highlighted it in yellow, but the automotive retail is positive. But again, most of that is stuff that's more original equipment or aftermarket stuff. But still, if you're looking at the automobile recycling, looking at the personal savings and disposal and the unemployment rates, how people are going to be handling their used car. Used cars are out on the market. That means they're going to need replacement parts, and they may not necessarily be going back to their dealers, so they may be looking for stuff on the market. Next slide. Are we there? There we go. All right, so here's the value line. It just came out on Friday. But again, a lot of the stuff that's in the auto parts industry are dealing with stuff like AutoZone and the like. But still, it's kind of nice to see where they are. They talk about supply chain constraints. I don't necessarily see that as being a big problem here with the semiconductor shortages, because again, they're recycling stuff that's out there. But that's sort of what the industry's talking about. Let's go to our next slide. I just sort of searched around to find stuff about auto recycling. So the overall market for auto parts manufacturing, which includes like your AutoZones, your genuine auto parts and stuff like that, is 68 billion. The used auto part industry is 6 billion, and this is about $1 billion in sales. I found this article from NBC 11 in Minneapolis that talked about what's going on in salvage yards, which is really where they are, and some interesting stats that are going on there. They're all hyperlinks, so you can see where I actually got them. And one was from a foundation, the bottom one, where 25 million vehicles per year meet the end of the road. And in the European Union alone, they generate 8 million tons of waste. So seeing how they handle that is really important. Let's go to the next slide. So it really is a modern junkyard, and they're going to be promoting all the tires that they save. They extract all the antifreeze and oil, so it just doesn't drip and go onto the surface of wherever they're dealing with this stuff. It's really an interesting thing to be able to take a look at. So they do try to salvage. They salvage 90% of the vehicles of the vehicle that comes on in. And they have even started to digitize everything that they have on there to take a look at. So let's go to the next slide. If you want to learn more about the auto recycling business, there's a YouTube video up there on the top from LKQ. Yes, it's an infomercial, but it really does show you some of the things that they're doing. I liked the stuff from Barron's, the stuff below. It talks about the auto part stock industry. That's pretty good. And yes, even towards the bottom, I have a vehicle recycling thing from Wikipedia. But I like using Wikipedia, and I look at the hyperlinks to sort of tell me what's going on with the industry. Next slide. So again, a quick look at the SSG Plus. When we see some things there, we see a big jump in the pre-tax profit and earnings per share from 19 to 20. And again, those are some of the things that they've not doing as many acquisitions, and they're trying to improve their bottom line by controlling expenses, and it's showing it's doing that. And then the current price, it's a little hard to see with the red arrow. The current price, which is the sort of red dash on that last I bar over there, is right in the middle. So it's trading right in the middle range. Not too bad, but it's not a beaten down all the way to the bottom, but it's not over. It looks like it may not be overpriced. Next slide. So here we are, the historic sales. Even though, AutoZone and Advanced Auto Parts and Genuine Parts are really dealing with their own stuff. They do have some used products that they use. It's really not a true competitor, but it's the best we got, and that's what actually BI was saying was their competitors. If you look at the growth on sales, LKQ is higher. Some of that's because of the historic acquisitions that they've made, but they do seem to be integrating things quite well and not too bad. Next slide. So the historic earnings, again, they're doing really well, as is AutoZone. And if you take a look at this all around, I mean, Genuine Parts has sort of got a negative earnings growth. But yeah, they seem to be doing things, and what I'm liking from this is that the earnings are continuing up because they're not acquiring additional stocks. They're trying to improve their bottom line. Next slide. Here's a pre-tax profit. Again, AutoZone is looking really, really good there. They're at 17%, but LKQ, you can tell this is not a high margin business like Adobe is. It's down around 7 to 10%. But again, from 2020 to 2021, it went up to 10.7%. So it is sort of talking about how it's consolidating and focusing on expenses, and it's showing in what they have on the SSG. So next slide. Return on equity, 12.8 is sort of average. It's not great. It's not awful. But if you look at that last year, 2021 is 17.8. I did have to take, AutoZone. They have a lot of, they have a negative return on equity. So as much as they were looking good on a lot of things, doesn't look so good when you have a negative return on equity. And I put on a red line across there to see sort of where the zero growth line is. So all the others are pretty much in the same ballpark. Genuine Parts is a little bit better, but overall, LKQ is right there with them. Next slide. So here's our debt to capital, and I had to take out AutoZone because if you look down below at the numbers, that debt to capital is extremely high. So yeah, they must be growing by acquisitions, is my guess, and that they're building themselves out quite a bit. It's the only thing that seems to make sense. But everyone else, they still carry a much higher debt than some of the other companies we're looking at. But they're pretty consistent with where the industry average is, so it's nothing to really worry too much about. Next slide. So I'm going to forecast the sales, and I came out with 6% for the forecasted sales. If you look at the far numbers, I have those things highlighted in the red dashes. I'm sort of showing you the projection numbers. The first two dots over there on the left-hand side, inside the highlighted areas, are the analyst consensus. But on the far side is actually the value line, where they're projecting somewhere in the 2025 to 2027 numbers. So if you look at my numbers, they're really not too far out from where everyone else is. And again, I did a preferred procedure with their historic earnings and reflecting the fact that they are buying back shares and that their margins are improving. So it's pretty consistent. Next slide. Section 3, these numbers are really pretty consistent, both on the high and low. You can say over the last 2 years, in 2020 and 2021, they've come down. But I think we can feel like, yeah, those aren't too bad for numbers in terms of where they are. And you can see in column G, the payout ratio, they only have payouts from a dividend in 2021. Everything else is zero. But yeah, these are pretty good, consistent numbers. I have nothing to worry about with this. Next slide. So our future high and low PEs, there's our, I went with 10, I went with 18 and 10 for the high and low PEs. I felt those, I brought them down a little bit just because I think things are not going to be growing as much as they have because of acquisitions. They seem to be slowing down a little bit, but I still get this thing as a buy in a 3.2 to 1 upside downside ratio. I thought I was pretty conservative in a lot of my judgments overall, and I still felt it was pretty good. I ended up selecting the low price of 33.20 based on, I even forgot the reason why I selected it, but it was, I wanted to go down a little bit lower than what the growth option was. I felt like that may be a little bit more reflective of where we are. But anyway, I felt pretty good with that. Next slide. So I like to always look at the ratios to see if these things are showing up. Again, we're looking for something relative value below 100 and projected relative value below 110 and a PEG ratio below 1.5. And so we don't want to get them too low either, because then that could be, it's too good to be true, or maybe it's a falling knife, but these are showing themselves up to be pretty much on sale. And the PEG ratio, I'm not paying too much for my future earnings growth. So I feel pretty good about where we are. Next slide. So I have a 5-year buy zone with a total return of 16.4. Again, I'm showing you where the payout ratio is. I'm going to keep it just where it is because that's where it's just their first year. It doesn't really have that big of an impact overall on the total return, but still it's nice to see it. But I'm getting something over 15% return. My par projected average return is 10.8. Pretty reasonable on the conservative side too. Next slide. So I think it's a large size, steady grower. It's well managed. It is on sale because it's trading below the 5-year average PE. I think it's a buy up to 51.50, and it's on Friday it was 50.68, and I thought I was using really, really conservative numbers. I think it's a candidate to purchase. And if you like it and it's gone up a little bit, not too much, I think you could still even find a purchase for it there. But that's my opinion of LKQ. Thank you. Susan, to you, and let's hear all about T. Rowe Price.
Susan, you got to unmute.
Got you. Good afternoon. My presentation tonight will be T. Rowe Price, which I found through a stock search on the BI website and also from the BI First Cut stock report. Financial companies are companies I enjoy reviewing because I think it's an area of the market that without it, we will be hurting pretty badly. Next slide. So, where I found this company, I used the 52-week low stock screen from Yahoo, and it popped up. And then I did some further research by checking out the financial services sector stock search on the BI website, and it popped up there as well. So I decided to take a closer look at this company. Next slide. This company has been around a while. It was, as you heard earlier from several people, it was hard to find a good competitor. I think one of the best competitors that there is BlackRock, Vanguard, but Vanguard is not publicly held. So here is the BI screen that I used to find the company. Sales equal to or greater than 8, same for earnings. I looked for companies that are medium because I have a good number of large cap companies in my portfolio. As I indicated, I like the financial services sector. And it returned 35 stocks, which I subsequently whittled down. And this was one of the top stocks that remained. So I decided to give it a further test. Next slide. The company ticker symbol is TROW. It, as I indicated, it's a medium company. It's in the financial services sector, and it's in the asset management industry. Next slide. The company makes money by providing asset management services to the public. This is a wide range of services from mutual funds, sub funds, collective investment trusts. It also does some 401k products for private companies, and it includes investors from outside of the United States as well. Next slide. It does variable annuities as well. And as you can see from the write-up, it also distributes its products in 3 geographical regions, including the Middle East and Africa. The fact that it provides retirement-based accounts for private companies gives it somewhat what the market terms are sticky, because these companies usually takes a while to change their retirement plans, and there has to be a very good reason for them to do so. So it allows them to have, a consistent asset base from those retirement plans. Next slide. As you can see, it also offers advisory services, and assets under management is approximately 1.6 trillion, and it has been broken up into equity, balanced, and fixed income offerings. And as you can see from the slide, equity comprises the larger portion of that offering. Next slide. This is the visual of TROW price. As you can see from its past history, up until recently, it had a fairly up, straight, and parallel with, it shows cyclicality, because we all know when the markets are good, you have a large inflow of money into mutual funds and equities, and even bond funds on bonds. But when the market's bad, a lot of us run for cover and we start pulling our money out. So you see that cyclicality, especially in pre-tax profit and earnings. However, the most recent quarter for this company, you've seen by the indicated with the hollow dots at the end of the line, is turned down. And that's because assets under management has been taking outflows. People, again, are pulling their money out, especially since the pundits are saying, oh, we may be heading for a recession. So people are going, oops, I need to protect. So that's what's been happening. As you can see from the last parallel line, you see the little red bar at the bottom. You see that that's the current price as of the date that this was done. And as you can see, it is close to the bottom of the price bar. Next slide. Here are competitors that I was able to pull up. Victory Capital is a fairly young company. Invesco, medium. Main Street, Franklin Resources, and again, the juggernaut of that area is BlackRock. And in case most don't know, BlackRock manages the a lot of federal and state pension and TSP plans. So I like TROW. It has a very large sticky component to it because, again, it's going to take a lot for Uncle Sam to move that money from BlackRock to someone else. So that gives BlackRock a very significant advantage over many of the other asset managers. Next slide. So here is a review of T. Rowe Price compared to its peers, and T. Rowe is in the black, BlackRock is in the green, and as you can see from this pictorial view, BlackRock and T. Rowe show most consistency. Next slide. Here is the review of the numbers. And based on this information, you can see that T. Rowe Price has a good revenue growth compared to many of the other ones, even though I think Victory Capital is showing a huge growth spurt. But again, as I indicated, Victory Capital is a very, very young company. So it's something that you would need to take into consideration when you're looking at these numbers. Next slide, please.
5 minutes left, Susan.
Thank you. And the earnings versus its peers, and again, you can see BlackRock and T. Rowe Price are showing the most consistency here. BlackRock in the green and T. Rowe Price in the black. Next slide. And again, showing the numbers. So we have a pictorial and a numerical review. And you can also see from this that BlackRock and T. Rowe Price are the top two competitors. Next slide. Here we're looking at how the company performs, how management is controlling costs, how management is making the money that it has for under management work for it, and what kind of debt process that the company has taken on. And as you can see from the debt to capital, T. Rowe Price has done a very good job of controlling the debt. It has not, in the last 10 years, has not gone above 5%. It hasn't really gone above 3%. So debt is very manageable for this company. Their return on equity has been growing consistently, and for the last 10 years, and so is the pre-tax profit on sales. Next slide. As I indicated here, this is just analysis of what we just talked about, how the company is managing, and to give you a feel for what management, because management is a very important component to allow us to understand, are we investing in a good company? Is management being a good custodian? Because we are not the ones that's managing the company. So, okay, Morningstar also looks at this company and says that it has a wide moat and that it's stable. Okay, so those are, again, good things to know. Value Line, which recently did a review of this, is also saying that this is a company that, it's stable. It's a dividend payer. It does, it allows you to get into a company that is consistent, and management is very straightforward at a reasonable price at this point, since the price has come down. Next slide. Here is the PEs, as someone else showed earlier. You can see the PEs in section D and E has been grouped in a fairly tight range. The high PE ranges from about 18 going down to about 14, and the low PE range is about from 8 to going on about 12. So even with the current PE is going around 10, for the low side, and the average PE is about 13.4. So that gives you currently showing that there is an undervaluation situation going on with the company. Next slide. And moving to the risk and reward using the information, I used a high PE of about 13 and a low PE of 8, which gives me a high price of $210 and a low price of 110, which right now the company is in the buy range. The buy up to is going up to $126.70, which the company is just under that price right now. So it is in the buy range. If you want a better risk reward, you can wait until the price falls a little bit more. But for a company that is consistent, that pays a dividend, and that continues to perform well, this is a bargain. Next slide. Here is the graphical risk, the reward or potential gain and versus loss. And as you can see down here, where the price is $125, is just below the top of the buy range, which gives us an upside downside ratio of 3.2 to 1. So we have 3 times as much make it to the possibility of making money versus 1 time the possibility of losing money. Next slide. Here is the 5-year potential. This just adds in the value of dividends to the mix and tells you how much can you possibly make if you sell at the average PE or the high PE for this company. So next slide. So in conclusion, T. Rowe Price is a medium-sized company, but in this sector, financial sector, this is actually, I would consider this a large cap company. It is the only company that's bigger than this, as I indicated, is BlackRock. Okay, T. Rowe Price is an excellently managed company, and it's trading at its 5-year low PE. It's a buy up to 126, and I think it could be a worthy candidate for your watch list or for possible purchase. Any questions?
Well, thank you, Susan. And you are now our 24th different presenter during all that we've been doing. So we'll go to the next slide, and we're going to finish up. We've thrown a lot at you. Here, there are the 4 stocks. Again, Adobe, LKQ, T. Rowe Price, EPAM. And let's sort of see where they all fit on the life cycle. This is something that we do with this. So let's go. Again, this comes from T. Rowe Price himself. And he thinks that companies or corporations have a life cycle of growth, maturity, and decadence. And we'll see it visually on the next slide. And this comes from the digital handbook. And we'll sort of go through this. Ed, why don't you tell us why you put Adobe at that particular spot on this life cycle?
Sure. Even though Adobe historically has had some really great growth over the last 6 years, I think there's some signs that point to it kind of continuing in that explosive manner is not necessarily clear. So that's why it's heading over towards mature growth, although it's right on the cusp between the two, between explosive growth and mature growth. Thanks.
Okay. Bhaskar, why don't you tell us about EPAM, and do we have that in the right spot for EPAM?
So it's a medium-sized company, and it has a potential to growth. As you can see, the last 20 years, they have been growing consistently. I think it has more room to grow. That's why I put it in.
Okay. And LKQ, it's just a standard mature growth. It's not, maybe it's not as sexy as some of the other stocks that we look at. Like I said, it's just it's a junkyard, but it's a very well-run, well-organized junkyard. And as long as there are people that want to have older cars and they need to refurbish, they're going to be in a pretty good shape. And having a nice little growth in the high single digits is not a bad number. Susan, why don't you tell us about T. Rowe Price and why you have it marked there?
Okay, as I indicated from my presentation, T. Rowe Price, while it's listed as a medium company from BI, I think is actually a large company in that industry, and it has consistently grown over the last several years, but it's not a company that does explosive growth. The only time you will see something like that would be if the market's extremely hot. Assets under management will increase, but that will go through across the platform to most of the companies that are doing quite well. So I think it's a consistent grower. It pays a decent dividend, and it steadily returns cash to shareholders. They don't try to make it too sexy. They just do what they do very well. And so it's a company that you can count on.
All right, let's go to the next slide, and I think it's now time for everyone to vote. So, Cheryl, you want to release the poll? Release the hound. Go ahead and vote and tell us which one you'd like to do further research on. Not necessarily the one that's a buy now, but the one that intrigues you the most. And we've got about 40, 50% of you voting. Let's see if we can get it up. We generally try to get it up in the 70 or 80%. We're over 70. We're coming up on 80. Come on, folks. Let's see if we can inch it up. Inch it up. There we are. We're over 80. We're going to count out a couple more seconds. 1, 2, 3. Looks like it's not moving. Go ahead and close it out, Cheryl. And if you want to share that and let everyone see what our winner is, there it is. T. Rowe Price. Susan, great job. So,
Thank
yeah,
you.
you get the first win. All right. So anyway, let's go to the next slide, and we'll finish up with telling you some of the things that are coming up. If we went through things kind of fast, here are our contact information. Jonathan, have you been looking at the questions in the question box, and are there any things that we can direct towards any of the presenters?
Okay, I have not been paying much attention to it. I apologize.
That's okay. Here, let me take a look and see what we got.
Brian had a question. He's tried multiple times to save the Digging into the BI webinar.
Okay.
And download it.
If other people are having trouble downloading the file, go ahead and type in the question box there. And if you can't get it and you want it, go ahead and reach us at the Digging into the BI Gmail account, and we will get you that the slide deck that we had for tonight. But just let us know if there was someone other than Brian that had a problem with it. Sorry about that, Brian.
And then Christian asks, is there a place on the BI website where you can go back to find out which issue had a particular stock to study?
Yeah, and I put that out. Yes, there is. You can, when you go to the Better Investing main page, betterinvesting.org, and you sign in as a member, you look under Find Great Stocks, and you'll see the stocks that are featured there. So I put the hyperlink in there for Christian. It looks like he's left. What else do we got?
And then Matthew asks, isn't DocuSign a competitor to Adobe? I guess this is a question for Ed.
Yeah, in fact, yes, Adobe offers a digital signature option with its document management stuff. I think the difference is DocuSign does that specifically, whereas with Adobe, that is just one of their many offerings as far as products and services.
Okay. All right.
And then I don't know if Maria's still on. Maria had some difficulty hearing the presentation, so I'm not really sure if she's still on or she will continue to have difficulties throughout the presentation.
All right, let's see where we also have some hands up. Let me see. Elizabeth, here, I'm going to unmute you. So, Elizabeth, if you want to ask a question, you can hit the microphone there and you can ask away. And if you don't, we can move on. Okay. If anyone wants to ask a question, just raise your hand and we'll turn you over to whomever can answer it for you. Quiet crowd tonight.
They're shy.
I don't believe that. See a lot of regulars out there, so thanks for showing up. Okay, no questions. Either we bored them and they're asleep, or we really wowed them. I'm going with we really wowed them. You know, so.
Yeah, we had positive feedback from Robert and Ralph, who did good analysis, great presentations for everyone.
Well,
so we wowed everyone.
Excellent. And again, well, you know, we're always looking for people. If you want to be able to promote your club, you can be able to, you know, have someone join us and do a presentation, and we'll help you with it. Like I said, none of us are experts. Let's go to the next slide and let's sort of finish up. So if you want to,
Hey, Kevin,
yes, go ahead.
Excuse me. Before you do that, there was one last question about, this is from Kenneth Williams. Where do we learn more about the asset tests? If you're answering, Kevin, I can't hear you.
Kevin, you're muted.
Yeah, I did that. I was muting myself. The acid test comes from Kathleen Richards, who's in the Northeast Ohio chapter. And if you reach out to me, you can do it through the Digging Into the BI Gmail account, and I will send you the link for that. But it's something that you should be able to find in the BI circle. But if you want the exact link, send me an email and I will send you the acid test. It's very much, I think, something similar to what Bhaskar was showing you with a quick analysis. All of them are designed as just a way to see, is this really worth my time and effort? You know, sort of to cut things through. So hopefully that will help.
Well, Kevin, let me point out also that the acid test is basically a quality check. And that quality check is also part of a handout on the Better Investing website. There is a handout, it's called Guidelines for Beginners under the stock selection guide. If you go to the SSG, there's a question mark and there's a list of worksheets and documents. One of them is the stock selection guide, Guidelines for Beginners. And so the acid test, acid test can get into a lot of details to the acid test, but a basic form of the acid test is the quality check on the stock selection guide handout too. And again, you can find that online under that question mark.
Well, thank you, Jonathan. That was a good and succinct way of doing it. So I appreciate that. Any other questions? All right. So if you want to join our mailing list, you don't have to be in the DC regional chapter. We send out the regular messages on this. But if you want to be part of the Maryland chapter, you can sign up through them too. But this image here is a hyperlink. So if you have the slide deck, you can just reach on that and it will turn into the exact location on how to do it. It's also up at the top here in this sort of faint orange up there. That's how you can get onto that mailing list. Let's go to our next slide. So yeah, if you like this stuff and you want to participate, remember we're all volunteers. This is how we do things together. That's the reason for being in an investment club or being part of the BI community. Please reach out to us and become part of either the Maryland or the DC regional chapter. Next slide. So yeah, if you want to volunteer with either one of us, we really are the heartbeat of the whole organization. You can learn new skills. You're going to be hanging out with people that like to do this, so it's only going to make you better. You'll be more knowledgeable. You'll be able to bring it back to your own club if you're in a club, if you're an individual member. And yeah, there are some discounts that come with this. So please reach out to any of us that are on this list. We gave you some links there. But any of the people that we're talking here, you can be able to find them and reach out to them. Next slide. This is what we're going to be doing in July. We're going to be doing global payments as a stock to study and Delta Airlines as the undervalued feature. And we're going to have a new presenter, a first-time presenter, who's going to be doing Generac. And then we have someone returning who's going to be looking at FedEx for us. So because of the 4th of July, it's not going to be the first Monday. It'll be the second Monday. So keep that in mind, and we'll send out a notice on that. And let's go to our next slide. This is something that we're talking about doing. We've been talking about doing for a while. Is that we wanted to look back at all the presentations from the first 14 months. We started in November 2020 through December 21, and we're going to look at some of the more interesting selections in terms of some of our judgments. There is a public dashboard up on Manifest. You don't have to be a member of. I don't think you have to be a member of Manifest to see the published dashboards. But if you go to Manifest, and again, this thing is hyperlinked to that location, and you can type in digging into or just digging, you will find all these dashboards. We have one for the winners and one for all the selections by year, and you can be able to sort of see how we've all done. So, yep, there it is. There's a hyperlink. When you hover over it, I think you have to come off and come back on. You'll be able to get that hyperlink.
All right.
There you are.
There we go.
So there it is. You can be able to see that and take a look at it. So we're going to be doing that the week after that. So on the third Monday, on the 18th, we'll do it. We'll send a notice out on that. And that's really, let's go with one more slide. I think we have. Again, sign up or go to the YouTube page. We'll have this up probably either tonight or maybe even tomorrow. Up on top is a direct link to our YouTube channel for both the DC and Maryland chapter. So we'll be able to post these things so you can be able to see what we're doing. Anyway, thank you very much, folks.
And for people that want to get in touch with me to talk about visiting a club, my email is on as the president of the DC chapter. Just look on there and you'll see an email for the president.
Very good. Thank you very much,
Thank
folks.
you to everybody and who attended, and thank you to our presenters.
Good night, all.
Good night, and thank you for taking the time to listen to us.